going on, everybody? This is Jeremiah Brown. We are doing the Bank on You podcast, and this is actually where you guys are going to get everything finance related, and I'm going to help you guys understand how to manage your personal finances. So without further ado, let me just introduce myself to you guys. My name is Jeremiah Brown. I came from a pretty underprivileged background, and I had to pretty much bootstrap my way to financial freedom, and that's what I'm here for. I'm here to give you guys the tools and tips that you need in order to help you get to that route. I want to cover a topic, and that is how to start a business, figuring out pretty much the metrics on, a step-by-step way to kind of get from the idea phase to an actual product or service, right? Let's get down to incorporating first, right? Because I think that's something that we don't even talk about, nowadays. Everybody just thinks that you can just, jumpstart a business and then you can have revenue, right? It doesn't work like that. What you want to do is you want to make sure that before you're starting a business, you want to know the rules behind a business, because there are rules in everything in life, and that includes the financial sector and the business world. I kind of want to go through my own personal background and how I kind of stumbled into starting my first business and how I was able to kind of learn how to do so. It was actually, I was a sophomore in college, and I created a mobile application called Cyclone HD. So for all you guys who don't know what that is, it's pretty much, the light will kind of rotate around the circle and you kind of have to hit it at the jackpot. It was like one of those Cyclone redemption games at an arcade, right? And I kind of turned that into an app. So I literally created the framework to it. I hired one of my classroom, buddies, my college roommates, to kind of create the app for me. He did the framework in the back end, and I had an app, right? And I sold 25,000 units in the first week. So it was great because I made a lot of revenue, but I didn't even have a corporation set up. I didn't even have an LLC set up. I didn't even know what that was. And it wasn't until I met his dad that was when he kind of helped me understand the landscape of business and how to incorporate. So the first thing he said to me was, I want to invest in your company. I'm 20 years old. I have no idea what he's talking about, right? So for me, it's like somebody comes and tells you at 20 years old, he wants to invest in you. You're like, okay, where's the check? The first thing he said to me was, no. We're actually going to walk you through the process of setting up and structuring your company correctly. I was like, okay, whatever it takes to get me the check, let's do it. And the first thing he asked me was if I was familiar with LegalZoom. And for all you guys who don't know, LegalZoom is an online platform to kind of, help you streamline your, corporation and getting incorporated process. So yeah, I didn't understand that, right? So he kind of walked me through it. He said, what we're going to do is we are going to set it up as a C corporation as opposed to an LLC. I asked why, right? Because I didn't know. He told me the difference was that you can raise capital with a C corporation. You can issue shares, in which you can't with an LLC. LLC, you would have to bring on partners on the back end. So for me, I didn't understand anything. I was just going through it. So he basically said, listen, just sign up, create a username on LegalZoom, tell them that you want a C corporation. And what we're going to do is they're going to give you an EIN, right? That's the first step that they do. They give you an EIN, an employer identification number. That is what you need. That's kind of like your social security number, but for business. It monitors and tracks everything regarding your life, business-wise. So what money is going out, your tax revenue, etc. So what he did was he told me to create an EIN, and with that EIN, we were going to go to the bank and create a business checking account. So with the business checking account, of course, for me, I thought I was in business. I'm like, okay, now it's where the money is going to go. And he walked me to the bank and said, all right, you're going to be the operating principal of this. I didn't know what the heck that meant. For me, I'm like, okay, I'm going to operate a tech company. I didn't even know. I just knew I had a product, And one thing that he left me with was always understand that with any game that you're playing, there's rules to it, there's structure to it. And it's okay to get into the game, but you want to eventually transition into playing the game correctly. That was the aha moment in my life. So That's what led me to actually write a book. I wrote a book called Bank on You about it. It is a step-by-step guide to help people start a business. It teaches you why you should start a business, the value of ownership, and how to kind of get incorporated the correct way. So I want to kind of go down the corporate setup, right? Because there are so many different corporations that we have to keep in mind of. Everyone thinks that since they have a product or service, that they're automatically in business. And in fact, you're actually right. You are technically a sole proprietor, whether you like it or not. You literally just signed up to be your own business owner. However, you don't have a tax base for your business. That's why a lot of people transition from the sole proprietorship to, LLC or C-Corp. It kind of gives you that limited liability exposure to anything that happens, just in case, someone slips and falls online, right? Because everything's digital now. But anyway, just in case there are any, incidentals, right? Your limited liability company or C-Corp, S-Corp, whatever, that will cover everything. So that's an LLC, right? Now, it gets a little bit complex, right? When you get to the C-Corps and the S-Corps versus the LPs, right? The limited partnerships. C-Corp is great if you have a tech product. So whoever has a tech product out there and you're making revenue and it's over $30,000, I would highly recommend a C-Corp because you can raise capital and it's easier for people in Silicon Valley to invest in your company. I remember I applied for Y Combinator, and part of the criteria was you had to have a C-Corp, right? A C corporation. So it makes it easier for them, to kind of become stakeholders in your company. For an S-Corp, it operates as a C-Corp, but to a certain extent. So a C-Corp, you file taxes twice. An S-Corp, you can still file it once, right? It rolls over to your personal account. Also, with a limited partnership, it's a little bit different as well, being that you have a partnership with someone. You're actually going into a business as a joint venture partnership. So that's a whole different structure than it would be with C-Corp or S-Corp. So these are all, things that obviously we have to look out for and consider if we are, starting our, companies, right? But overall, if you're just getting started, you should probably wait. And I'm gonna tell you why. What's up, everybody? I just want to say thank you all for checking out the very first Bank on You podcast episode. If you want to hear the rest of this segment, go ahead and click on the links in the description below, or you can search for Bank on You podcast on Apple, Spotify, and SoundCloud. If you guys want more information, you can follow me on Instagram, on all of my socials. My name is I am Jeremiah B. You can find me on Twitter, Instagram, Snapchat, and Facebook, of course. LinkedIn, Jeremiah Brown. I am Jeremiah B. Thank you, guys.